All right, today we're going to look at a company that almost never makes headlines. It's not some flashy tech disruptor. Nope, it's a trucking company. But its story and especially its performance are just absolutely remarkable. We are talking about Old Dominion Freight Line.
And you know what? Let's just start with the punchline. Over the last 20 years, if you had put your money in Old Dominion, or ODFL as they're known, you would have beaten the returns from Amazon, from Costco, and even from Microsoft. A trucking company. It beats some of the biggest wealth creation machines of our lifetime.
So that just leads to the one obvious question, right? The one we're going to spend this entire explainer unpacking. How on earth is that even possible? Let's start by digging into how this company became such a quiet superstar in the first place. You know, ODFL's journey is really all about resilience. It started way back in 1934 with just one truck in the middle of the Great Depression. Talk about tough beginnings. A huge turning point was 1980, when deregulation just blew the industry wide open, and that allowed ODFL to go national. They went public in 91 to get the cash to fuel that expansion. But what's really telling is how they act during a crisis. In 2008, when all their competitors were slashing prices to survive, ODFL held firm. That kind of discipline has totally defined them, and it's what positioned them to capitalize on huge opportunities, like when their major rival, Yellow, went bankrupt just last year. Now, to really, truly appreciate ODFL's success, you have to understand the brutal world they operate in. This isn't just about driving trucks. It's about surviving an absolute economic war zone. The specific part of the industry ODFL is in, it's called less than truckload, or LTL, and it's famous for being a graveyard. Seriously, it's where trucking companies go to die. Get a load of this number, 52. Out of the top 60 LTL carriers back in 1980, that's how many were gone just 2 decades later. Gone. Bankrupt or bought out. In this business, survival is the exception, not the rule. And here's why it's just so tough. The industry is constantly plagued by these savage price wars. You need massive, constant investment in new trucks and terminals. It's incredibly sensitive to the economy. I mean, when the country sneezes, the trucking industry gets pneumonia. And the logistics of managing thousands of different partial shipments in this giant hub-and-spoke system, it's just mind-bendingly complex. So how in the world did Old Dominion not only survive this meat grinder, but actually become one of the best performing stocks in America? Well, the answer lies in their secret sauce. It really all comes down to these 3 pillars that create their competitive moat, their big advantage. First, their service quality is just on another level. Nobody else can touch it. Second, they have an absolute obsession with operational efficiency. And third, a deeply ingrained culture of long-term thinking. Let's start with service. The numbers here are so simple, but they're incredibly powerful. ODFL delivers 99% of its shipments on time. And their cargo claims ratio, that's how often they damage the stuff they're shipping, is a tiny 0.1%. For context, the industry average is 10, even 20 times higher than that. This is exactly why customers are willing to pay a premium for that reliability. It saves them so many headaches and a ton of money in the long run. Okay, so before we jump to the next slide, we need to quickly understand one key metric. It's called the operating ratio, or OR. It sounds a little technical, but it's super simple. It's just a company's costs as a percentage of its revenue. So a lower number means the company is more efficient and way more profitable. It is the single most important number in this entire industry. And this chart, well, it says it all. ODFL's operating ratio is consistently down in the mid-70s. Meanwhile, the industry average is way up there, at 85% or even higher. That massive gap isn't just a number on a page. It's a huge cost advantage that translates directly into higher profits and more cash to pour back into the business, which just widens their lead even further. It's a beautiful cycle. And finally, there's the culture. Look, this is not a company that's focused on the next quarter. It's focused on the next decade. And that comes from things like consistent family leadership, a non-union workforce, which gives them a ton of flexibility, and making really tough long-term decisions, like we talked about, refusing to join that price-cutting frenzy back in 2008. They protect their brand at all costs. And they just pour money back into the business, spending over $2 billion in the last 10 years alone to make their network stronger. This whole mindset is just perfectly captured by their former CEO, David Congdon. He said, they don't rest on their laurels because they know how unforgiving the trucking business is. It's a culture that was born from surviving the Great Depression, right? It's a humility and a relentless focus on execution that just keeps them sharp.
Okay, so that's the story of how they got here. But the big question for any of us as investors is, what about the future? Is ODFL a good investment today? Let's look at both sides. The bull case, the argument for it, is pretty clear. They are the best at what they do, hands down. They keep stealing market share, and their debt-free balance sheet makes them an absolute fortress. The bear case is also straightforward. All of this excellence, it's not a secret, so the stock trades at a premium price. And their business is cyclical, it's tied to the economy, and while yellow is gone, other major competitors are definitely getting tougher.
Looking at how management uses its cash is always really revealing, and their top priority is crystal clear. Half of their cash goes right back into strengthening the business. Almost all the rest gets returned to shareholders through buybacks and dividends. This shows you a management team that's focused on creating long-term value, not just building some kind of empire for themselves.
Which, of course, brings us to our final question. We live in a world that is obsessed with the next big thing, right? With disruption and moonshots. But the story of Old Dominion Freight Line really suggests that maybe, just maybe, the secret to extraordinary returns is found in being boring but brilliant. And that's something we're thinking about